Okay, let's unpack this. Welcome back to the Deep Dive. We're the place that sifts through, well, complex financial stuff to pull out the really key insights, just for you. Today, we're diving deep into the latest from Capri Global Capital Limited. They're a pretty significant player in the NBFC space, non-banking financial company sector.
That's right. We've got a stack of their recent filings here. There's the report from their monitoring agency on how they used their QIP funds,
Hmm,
the outcomes from their board meeting for the quarter ending June 30th, 2025, and also some details on key appointments, leadership changes.
right.
So our goal today is really to cut through all the corporate speak, and review what actually matters, give you a sharp, comprehensive understanding of what's going on inside this company and maybe the wider financial scene too.
Yeah, think of this deep dive as your direct line, your shortcut to understanding not just what happened, but the why behind some big corporate moves. We're talking managing huge chunks of capital, changes at the top, and even some, well, pretty interesting shifts in how they handle their audits, driven by rotations. It's all about getting those aha moments, without getting swamped. Let's get into it. So first up, the basics, the official stamp of approval. On August 1st, 2025, Capri Global's board signed off on their financial results for Q1. These are the unaudited standalone and consolidated results for the quarter ending June 30th. Foundational stuff, yes, but what about the auditor's view? That's always key.
Yes, and what's really telling here is that the statutory auditors, that's MSKA and Associates, they issued what's called an unmodified opinion on their review. Now, for you listening, an unmodified opinion, it's essentially a clean bill of health on the review.
A clean bill of health.
Okay.
Yeah, it signals the auditors looked at the financial statements and found they line up with accounting standards, regulatory requirements. It's a pretty strong vote of confidence in how they're reporting things.
That definitely sounds positive. But, NBFCs can be complex beasts. Does an unmodified opinion, while good, sometimes mask underlying trends or maybe operational details that aren't immediately obvious, even if it ticks the compliance box?
That's a really sharp question. You're right. It confirms accuracy, it confirms compliance, but it doesn't necessarily spotlight every single strategic challenge or opportunity for that matter. For that, you really need to dig deeper, look at the specific movements, like how they're raising and using capital. So think of the unmodified opinion as step one, the foundation. But the real story often emerges when we, well, follow the money.
Perfect segue. Because how a company manages big influxes of cash often tells you a lot about its discipline and strategy. So let's follow that money trail. Let's talk about their QRP, the Qualified Institutions Placement. Just quickly, for anyone less familiar, a QIP is basically a way for a listed company to raise a chunk of money directly from big investors, right? Institutional ones. Faster than a public offering, usually.
Exactly right. And Capri Global did a pretty significant one. They raised equity shares worth Rs 20,000 million, that's 2,000 crore rupees, which netted out after costs to Rs 19,488.88 million. So just under 19.5 billion rupees.
Wow. Okay.
And what's really important here is the role of an independent body, in this case, Cressel Ratings Limited. They acted as the monitoring agency, their specific job, to check that every single rupee from this QIP was used exactly as stated in the original objectives.
And the big headline from Crystal's report for Q1.
No deviation. That's the key phrase.
No deviation.
The report literally says the proceeds from the said QIP have been appropriately utilized towards the objectives stated in the placement document. That finding, no deviation, it's not just ticking a box. It's actually a very strong signal, especially in a sector like NBFCs where capital management is often under the microscope.
Yeah, that sounds like good governance in practice.
It absolutely is. It suggests Capri Global has a clear plan and the discipline to stick to it. So, breaking it down, a big chunk, about 9.6 billion rupees, went to boost their capital base, strengthening their foundation, and another 3.5 billion rupees or so is used to pay back some outstanding borrowings. So, using the money exactly as intended, that reinforces transparency, good stewardship.
Right. So, you do the math. After those uses, there was still a fair bit left over, around 6.3 billion rupees unutilized at that point. What happened with that? Did it just sit in an account? And what is how they handled that tell us?
Very important question. And no, it wasn't just sitting idle. The report details how that unutilized amount, the Rs 6,299.50 million, was actually deployed pretty prudently during that quarter ending June 30th. They put it into secure, short-term places.
Like what?
Well, for instance, large amounts went into fixed deposits, $400 million and $1.5 billion with Indian Overseas Bank, another $250 million with Shivalik Small Finance Bank, plus $250 million into the Bank of India Liquid Fund. The rest was held in various company accounts, like the Yes Bank monitoring account and the QIP escrow account.
So parking it safely, but still keeping it somewhat liquid and maybe earning a bit of interest.
Exactly. Responsible cash management. It shows prudence, which is always good for building investor confidence.
Okay, so that covers the QIP money. But companies like Capri Global also use another tool, right? Non-convertible debentures, NCDs. Can you remind us what those are?
Sure. NCDs are basically debt instruments. Think of them like corporate bonds. Companies issue them to raise longer-term capital from investors. Investors get regular interest payments and the principal back at the end. The non-convertible part just means they can't be converted into shares of the company.
Got it. And how did Capri Global fare on the NCD front? Any issues there?
Similar stories of the QIP, actually. The board also approved a statement confirming, again, no deviation or variation in how they use the money raised from previous NCD issues. This consistency, using funds as promised, it's really vital for maintaining trust.
So they kept their promises on that front too.
Seems so. The report lists examples like 150 crore raised back in 2019 from LIC, 20 crore more recently from the MSRTC Provident Fund, 50 crore from various entities in April 2025. And in all these cases, the funds were fully used for their stated purposes, things like financing activities, paying off older loans, business ops, lending onwards, working capital, the usual stuff for an NBFC. Importantly, the company reported not applicable as there were no defaults made regarding any outstanding defaults on loans or these debt securities. So a clean record on repayments, too, reinforces that picture of stability.
Okay, stability is good. Let's shift to another angle on that. Security cover. This sounds technical, but it's pretty fundamental, right?
Okay.
It's about how much the company's assets back up its debts.
Exactly. It's a key measure of financial health, of solvency. How well do the assets cover the liabilities? As of June 30th, 2025, Capri Global reported total assets of Rs 18,735.50 crore. That's about 18.7 billion. And total liabilities of Rs 12,659.46 crore, so about 12.6 billion.
So significantly more assets than liabilities.
Yes. And the report gives specific cover on book value ratios. It mentions 1.84 for assets with an exclusive charge, 1.28 for other secured debt, and 1.53 for assets shared by what they call pari passu debt holders.
Hold on, pari passu. That's a term that might trip some people up. What does that mean here?
Good flag. Pari passu is Latin, basically means on equal footing. In this context, it means certain assets are pledged equally to a group of lenders in the same class. So if something goes wrong, those lenders share the claim on those specific assets equally, rather than one lender having first dibs over another within that group.
Okay, equal footing. Makes sense. And what kind of assets are we talking about that form this security cover?
Well, the report lists things like property, plant and equipment, investments, cash. But the big one, understandably for an NBFC, is loans. Loans made up nearly 15,000 crore of their assets, and a huge chunk of that, almost 14,500 crore, was under that pari passu charge we just talked about.
So those loan books are the main backing for a lot of their debt.
Precisely. These figures give you a tangible sense of what's backing the company's obligations. It paints a pretty robust picture of their ability to cover their debts.
Right. Now let's switch gears a bit, away from the pure numbers towards leadership and governance. There were some changes at the top, right?
Yes, a couple of key moves effective August 1st, 2025. First, the Chief Financial Officer, Mr. Parthashar Graborthy, resigned from his role as CFO and Key Managerial Personnel, or KMP, at Capri Global Capital Limited.
Resigned. Where did he go?
Interestingly, he moved within the group. He became the CFO of Capri Global Housing Finance Limited, which is a wholly owned subsidiary.
So staying within the family, just shifting focus perhaps to the housing finance arm.
Seems like it. And stepping into the main CFO role at the parent company is Mr. Kishore Lodha. He was approved as the new CFO and KMP, also effective August 1st.
Okay, and what does Mr. Lodha bring to the table?
Quite a bit, actually. The announcement highlights over 23 years of experience. He's worked across fundraising, QIPs, IPOs, you name it, investor relations, financial modeling, accounting, audit, tax, budgeting, the full spectrum. But what's particularly relevant here is his deep experience in the NBFC sector, areas like MSME loans, vehicle finance, housing finance, even portfolio buyouts.
So bringing specific NBFC expertise right into the core CFO role, that sounds like a strategic move.
It does. It likely signals a desire to leverage that deep sector knowledge right at the heart of the main company's financial strategy.
Okay, that's the CFO transition.
Yeah.
But there was another appointment that really caught my eye related to their auditors. It sounds significant.
Ah, yes, the joint statutory auditor appointment. This is where it gets really interesting, I think. The board approved appointing Ms. Singhi and Co., chartered accountants, as joint statutory auditors. Now, this is subject to shareholder approval at the upcoming AGM, and it's for a 3-year term.
Joint auditors. That's
Yeah.
the key word. Why two audit firms? Is that common?
It's becoming more common for larger entities, and in this case, it's not just a choice, it's driven by regulation, specifically by the Reserve Bank of India, the RBI. Back on April 27, 2021, the RBI issued guidelines. These guidelines mandated that NBFCs reaching a certain size specifically, an asset size of Rs 15,000 crore or more at the end of the previous financial year,
15,000 crore.
must have their statutory audit conducted by at least 2 audit firms. That's what's known as a joint audit.
Okay, so it's a regulatory requirement kicking in because Capri Global grew past that size threshold.
Exactly. As of March 31st, 2025, their asset size did exceed that 15,000 crore mark. So, bang, the joint audit requirement became mandatory for them.
Makes sense from a compliance perspective. But what's the RBI's thinking behind mandating this? What are they trying to achieve?
Well, the RBI laid out some clear objectives for these rules. They want to implement what they call ownership-neutral regulations. They want to safeguard the independence of auditors, prevent potential conflicts of interest when auditors are appointed, and ultimately, the big goal is to enhance the overall quality and standard of audits across all the entities the RBI regulates, including these large NBFCs. More eyes, potentially different perspectives, leading to a more robust audit.
Higher standards, more independence, better quality audits. That seems like a positive direction for the financial sector overall.
I'd agree, it increases rigor. And Singhi & Co., the firm they're bringing on alongside MSKA and Associates, they have serious credentials. Founded way back in 1940, ranked among the top 10 assurance providers in India, part of a large global network, more global. They have extensive experience in the BFSI banking, financial services, insurance sector, audited over 100 listed companies. They definitely meet the RBI's tough eligibility criteria.
So this isn't just about ticking a regulatory box. It's a significant move towards greater scrutiny, greater transparency, mandated by the central bank itself. How does that impact, say, an investor looking at Capri Global?
Well, it should theoretically increase confidence. Knowing that 2 independent firms are reviewing the books, adhering to stricter RBI guidelines on auditor independence and quality, it adds another layer of assurance. It signals a commitment to strong governance, which is always a plus.
Okay, so let's try and pull all these threads together. We've covered quite a bit from Capri Global's recent reporting.
We have.
We've seen effective use of that big QIP, capital infusion, responsible handling of leftover funds, a solid security cover backing their debt.
Right, signs of financial discipline there.
But maybe the most telling developments are these adaptations to the regulatory landscape.
Huh.
The leadership change bringing in deep NBFC expertise, and particularly this move to appoint a joint statutory auditor mandated by the RBI.
Indeed. If you connect it to the bigger picture, yes, the careful reporting on QIP and NCD use, the healthy security cover that all paints a picture of financial discipline, like you said. But what's really fascinating, I think, is seeing that joint auditor appointment in action. It's driven directly by RBI rules. And it highlights this broader industry-wide push for more accountability, more independence in the financial sector. It's not just Capri Global, it's a system-level change. And that raises an interesting question for you, the listener, to think about.
Okay, let's hear it. A final provocative thought for everyone to mull over.
Well, think about this. In today's world, with so much information swirling around, complex financial markets, how do these kinds of regulatory changes like mandating joint audits actually benefit you? Whether you're just learning about this stuff or maybe you're a potential investor.
How does that increase scrutiny, that push for transparency, maybe reshape the trust we expect or demand from financial institutions going forward? Something to ponder. Thanks for joining us for this deep dive today. Until next time, keep learning.